Hello guys, welcome back. Today's video is going to be about the inducement based entry model. As you can see from the topic, we are actually focusing on inducement, and we have to make sure that inducement has already been taken before price mitigates our entry point or our point of interest or our PD array according to ICT. Okay, so we have some simple examples here on how we can wait for this kind of structures to be printed on the charts before we can actually take our entry. So if you look closely here, you can see that I've just shown some few examples here. Okay, very few examples. You can see this is the inducement point. Okay, this is where inducement is. And why am I saying this is where inducement is? It is because we had this minor break of structure, which is inside the internal break of structure, which is the weak one. Okay, this is not a strong break of structure. The strong break of structure is on this external level here. Why? Because here we were creating what we call the lower lows and lower highs. Okay, we had these lower lows and lower highs, and this was another lower low, and this was the lower high. So we only look for entries on the point where we have these lower highs. Okay, and the lower high has to be created from the lower low. So we have to make sure that before we can actually mark our entry point, there has to be this creation of lower lows and lower highs. Okay, these points which creates the bearish structure. We can't actually use this as our entry. This one, we can't use this as our entry because there is no any strong lower low. Here was just some form of lower low and lower high, which are inside. They are internal structures inside this range where we had our swing high and swing low. Okay, the swing high was this, and this was the swing low. So we had this this formation, this creation of this second entry point as inside. It was inside this swing high and swing low. Okay, so this was the weak one. So we can't actually execute on this. We can't execute on this because this is on the internal break of structure, which is the weakest. Okay, so that's how we created this inducement. So you wait for price to actually sweep it, no matter what kind of structure it will show. It may try to actually manipulate some early sellers here, and then some people will take to track entries there, but then price will reverse fast, and then will come to mitigate this. Okay, and that's where you are supposed to execute. The same way with this example where we have this equal highs there. Okay, this level was created from this minor break of structure. The major one was this, which is the external break of structure, and this was our lower high. So the entry was supposed to be on this point where we have the lower high. Okay, so another example when we are bullish is this. Okay, you can see we had this higher low. Okay, and this was the higher high. Okay, so we created this break of structure there, and then we formed this new higher high, and then we formed this new higher high again, and this was the higher low. Okay, why are we not using this as our entry point while it is the higher low? It's only because there is an unmitigated one here. We have unmitigated what? Unmitigated bullish order block. Okay, and also we may have some form of an imbalance at this area. Okay, at this area we may have some form of an imbalance of fair value gap, which always acts as the sign of price to create some form of inducement. So why am I saying that? Because if we had a fair value gap there, okay, if we had a fair value gap here at this area, if we had a fair value gap, okay, it means this fair value gap was filled here with this move, okay, but this move didn't mitigate this order block, right? So this movement didn't mitigate this bullish order block on the discount level, but just filled this imbalance and then pushed higher, created a new high. Okay, now the next time price revisits this region here, this level here, price is going to actually sweep it. Why? Because most of the time you will see, try to backtest on your own and you will see the area that has filled an imbalance, most of the time will be swept the next time price revisit it. Why? Because there is an unmitigated order block down here. Okay, we have unmitigated order block down here, which means there is something that has not yet been filled, and price has to come down and fill this area by tapping into this bullish order block, which was the initial point where these market makers started to push price higher. So they have to come back in here, tap into this bullish order block before they create the continuation, which is a true movement. Okay, so that's another explanation. Okay, the same way with this area here, we had this equal lows, which are acting as liquidity points. So price will tend to sweep them the next time they revisit that level, because there is unmitigated order block down here. Okay, very simple explanation. So let's check from the let's check on this, the examples. Okay, this is the BP card in the 5 minutes time frame, and you can see, okay, you can see what has happened here. Okay, price was creating this break of structures, right? It was creating this break of structures. We had this break of structure there, then we had another break of structure here. Okay, so what happened? Why did this area become an inducement? It's because of this area. Look at this. Okay, as I explained, there is a fair value gap here. There is an imbalance there. Okay, there is this imbalance here. This imbalance is the one that was filled here. This movement filled this imbalance there. Okay, we filled this imbalance with this retracement. Okay, but what happened while price was mitigating this fair value gap? We created some sort of equal highs. Okay, with the red line there, you can see some sort of equal highs. So let me show you. Okay, you can see we formed this form of equal highs here. Okay, this equal highs, and this was an imbalance that was filled. But what happened is that price didn't mitigate this order block, the premium order block, and that was the issue. Okay, that was the issue, because price didn't mitigate this bearish order block. We have to expect that price will tend to come back and tap into this bearish order block. Okay, before we continue selling. Okay, and this is what happened. That's why this area become an inducement level, IDM, an inducement point. Okay, and that's why price has to sweep this before continuing to go down, and that's why you see what happened there. Okay, see price tried to revisit this region here with this movement there, but it went just a little bit, and then price went higher, taking out those early sellers there before tapping into the bearish order block, and then you can see what happened. Price continue going down. So that is simple, and that's how you actually execute, by taking into account the concept of inducement, okay, or liquidity sweep. Okay, so let's take another example. So you can see this. We have this another example, very simple example. The same way that break of structure there, right? Created this. Okay, what happened then? That price went a bit down, up, down, but didn't create a strong break of. This is a weak break of structure. Okay, and this was a strong break of structure. So we didn't have the strong break of structure, which is price has to close with the body of the candle below this previous lower low. Okay, price has to break and close with the body of the candles below this lower low. What happened here? We had this lower low, but price didn't close with the body of the candle below this lower low. Okay, or swing low. That's why this area become weak. The lower high here become weak, because this lower high didn't push price and didn't create a new lower low, which was strong one, by actually closing below with the body of the candle. You know, we just see wicks here, and this is what creates the weakness of this. Okay, and that is what will become the reason behind this area, this order block becoming an inducement level, and that's why price went there, and you can see this. We had a bit of this tap here. Okay, you can see this. Price just reached here, and this is where we had our order block. Okay, so mitigated a little bit, but what happened is price went down a bit and then went up very fast, tapping into this bearish order block, and then continue going down. Okay, so that's how simple it is. You can see that's a very simple explanation. Okay, another example you can see on this gold 30 minutes time frame. You can see we had what you call continuation of price creating higher highs and higher lows, higher highs and higher lows. Okay, but then what happened is price failed Yeah. So you can see we had an order block there, which was mitigated. Then we created a break of structure there, forming a new higher high. Okay. From this new high, then tap into that high low. Then we went up a bit, down a bit, then went higher. Why did I use this? Why did I use this as my order block? It is because this one, the lower one here, was mitigated there. As you can see, was mitigated there. Why? Because we had change of state of delivery down there. We had this change in state of delivery here. Change in state of delivery at the same region where we created this order block. Okay. See, this order block was formed there, and that's the point where price moved higher and then came down like that. Tap into this order block, mitigating this order block. So now this order block was already mitigated. This one, this was an order block that has already been mitigated there. Okay. So if it has already been mitigated, it means we're already done with this. So we formed this new and mitigated bullish order block. And this was our entry point. And this is where we had a major break of structure. Okay. The major break of structure was here. Why? Because price just went up, down, and then higher. So we created this point, which became our bullish order block. And now what happened? While price went higher, went down a bit, went higher a bit, but didn't close above this for us to create, to see a strong formation of a new higher high. So this area is a weak point because there is no any clear break of structure from this point to this point here. There is no any break of structure. Okay. That's why this area become a weak point, and this is our inducement point. So price has to sweep it like that, you can see. And then we went higher. See, price pushed it higher. And that's how we executed that trade. Okay. Just as simple as that. Okay. Another example is on GBP card 5 minutes time frame. You can see we had turtle soup down there. First, we had that turtle soup. Okay. After we had this turtle soup, then we had this market structure shift there. Okay, market structure shift. After we had that market structure shift, you can see price left behind this order block, and above the order block we had this fair value gap. Okay, but when price went higher there, you can see formed this weak point. Okay, this weak point here because we didn't mitigate any kind of an order block or any kind of an entry point there. Okay, so what happened is this became our weak point. Okay, which is an inducement point. And you can see this form of consolidation there. Okay, this form of consolidation. That's why we see price went down, swept to this level. Okay, and after sweeping that level, that's where we had the mitigation of our bullish order block down there. Okay, very simple like that. So you can see that trade. So the very simple trade. Okay, executing there. Okay, very simple. And see price went higher and tapped into what? Into our take profit. So this is another example. You can see same thing that I explained. This is where we had our inducement. This is our true point of interest. Okay, our true point of interest, our true bearish order block. The formation of an inducement makes makes easier for you to mark the perfect entry point. Okay, so like what we can see here, this one here, this is what makes this one as a strong point of interest. Okay, because without this was still not a very strong point of interest. We could have been going through some tough decision here. Like it could have been very difficult to make a decision here because we had another order block there. Okay, so the thing that makes this one as a high probability entry point is because of the formation of this inducement here. Okay, that's the reason behind it. And why? Because we had some form of consolidation, which is very, very, very dangerous. Okay, some form of liquidity sweep has to happen here. Okay, that's why you see price went higher and tapped into this. This was like a formation of a consolidation. So a consolidation is another form of liquidity point. Okay, now let's check another example. Okay, already see that. I think you can see everything there. Very, very nice trade. Okay, the other trade is this one. You can see very simple. Okay, this was our premium order block. This was an area where we had an inducement. Why? Because there was no any clear market structure shift before formation of this. Okay, there was no any clear point of interest for us to actually use this as our entry. Okay, because at this point here, there was some form of no clear momentum from this point here. Okay, you can see price went down, it consolidated a bit and went down. So we had market structure shift here. So this was an area where we created a very weak what, lower low and lower high. Even this area, this is where we had the external market structure shift, okay, which is the strongest one. So you can't use this as your point of entry because we didn't have any strong structure here. We didn't have any strong price movement because this was formed, this order block here was formed on the very weak price leg, okay. The strong price leg was this. This was where we had a strong point for us to say, oh, this is going to be our point of interest, okay, and not that one, not this, because this is where we created this order block, and then we had this some sort of weak or internal structures there. Now this area was a weak structure, okay, and that's why this became an inducement, and price has to sweep it like that, and then we had the true movement to the downside, okay. So that's how simple it is. And another example you can see here. This example you can see here, we had turtle soup, and then we had break of structure, leaving behind this form of imbalances, and this was our discounted bullish order block, created some form of weak structure or internal structures, okay. These are internal structures, but when price had to actually sweep one of them, so this was swept because we are looking for buys. So this area was swept and became an inducement. Okay, so we have an inducement before tapping into this bullish order block and price went high, as you can see. So that's another example of how you can mark inducement. The last example is this, okay. You can see here, this was a form of an inducement. This is an inducement in form of trend line, okay. It's an inducement in form of trend line, and our true order block is here. Okay, that's our true order block. Also remember what I said, we had this fair value gap there. Price filled this fair value gap, okay, and went a bit high. And remember what I said, like the next time price will visit this level, which filled the imbalance, most of the time we will see inducement being created. And that's what happened there. You can see this was an inducement that was formed. Price tapped into this bullish order block and then went higher. So guys, that's it. Thank you for your time, and I hope this video was educational. So if you like this video, if you have actually learned something, don't forget to like, comment, share this video, and please guys, don't forget to subscribe. Thank you for your time.